Hello guys, I hope you're okay. Let's start our analysis for gold for the 6th of July 2023. So starting with Forex Factory, we got very heavy news on this day. First of all, we've got OPEC meetings. This is Association for the Oil Producing Countries. This may affect the price of oil, may affect the gold as well as at 1:15 p.m. we got ADP non-farm employment, and 1:30 we got unemployment claims. We got ISM services PMI at 3 p.m. and jobs job openings 3 p.m. These are the heavy impact news. And OPEC meetings, OPEC. You can read further here. OPEC meetings are usually held in Vienna and are attended by representatives from 15 oil-rich nations. They discuss a range of issues regarding energy markets and, most importantly, agree on how much oil they will produce. The meetings are closed to the press, but officials usually talk with reporters throughout the day. In a formal statement covering policy shifts and meetings objectives is released after meetings have concluded. Right. OPEC nations represent why traders care. OPEC nations represent around 40% of the world's oil supply and are unified in their oil production levels with so much control over oil supply side. Shifts in their production levels can have a significant impact on oil prices. Right. So oil prices may affect the gold price as well. Right. At 1:15 p.m., we've got ADP non-farm employment, and what is your estimated trend in the number of employed people during the previous month, excluding the farming industry and government? So non-farm, so farming is not included. Okay, the actual greater than forecast is good for currency. So last time we have June the 1st, it was actual was a positive. The expected was 173 and actual was 27. It was positive. And this was last time, and this time, let's see. It looks lower, so it might likely be better. If it's greater than forecast, so then it'll be good for currency. So last time it was forecast, previous was 291, and the forecast was 173, and it was 278, the actual. So it was greater than forecast, so it was positive. So if it's positive, the gold, it will affect gold negatively. So gold may go down. Similarly, okay, this is actually less than forecast is good for currency. So forecast, if it's less than forecast, then it'll be good for currency. That means it will be positive. And this one, ISM services PMI, this level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. That is, if it is positive, if it's actual greater than forecast, then it's good for currency. Last time it was forecast was 52 and it was 50, it was negative. And this job openings, number of jobs opening during the reported month, excluding the farming industry. So last time it was 9.4, the previous one 9.75. Actually was 10.10. It was very higher. It was even higher than the previous one. So it was positive. So it was good for currency. So it's good for currency if it's positive. Right. So that's it for the news. It's very important that tomorrow we may see a lot of volatility in the market, and be careful and manage your risk accordingly. And make sure you keep an eye on your trades. Don't leave them unattended or without proper risk reward management and without stop loss. Even you don't have a take profit, but you must have a stop loss to protect yourself from the huge losses. Now let's go on gold. What's happening in gold? What's the situation? Monthly, we can see the market is bearish in monthly. Weekly market is bearish. This level was broken, and market has tested this level as well. It's currently testing it as well. And daily is bearish, and hopefully the market today's this candle, if it's fifth today, this analysis for the 6th July. So hopefully this candle closes bearish, and if it does, we can expect that market has tested this level is a strong level, and market can go to the previous levels, and these are the levels market can go easily, especially with the news effect. And if the news is positive, so we can expect the market to this level, and even it can break this level as well. And the next target will be this. This is our next target. But market doesn't care what we analyze. Market goes with its own pace and with its own speed. If there's enough liquidity in the market, and then market can go accordingly. Market have to create liquidity to make moves. If there's no liquidity, market won't move much. But anyway, tomorrow's news, so we expect a lot of liquidity in the market. So these are some levels. Nothing hard and fast. There's no hard and fast rule for levels, but this is the general indications for you to look at. And you can see here that is a fair value gap. This level is broken, we can expect very huge move. This level is, what level is it? It's 1885, which 1885 roughly. The level is broken, then we can see huge movement. The first target 1850 roughly, and the next target 1835 and 1820, 1800 roughly. So these are the levels, and that's 4 hours, and 1 hour we have a lot of room to move here. As you can see that currently the market has broken this level. It's tested as well, and now market have room to move down to the downside. However, it may affect retest it again and come back here before it gives us a next move. So let's see what happens in tomorrow, and we'll trade accordingly on the reaction of news. We always look at the market. We don't just jump into the market. We have to look at the market, how the market is moving, and we'll take our trades. I hope this is helpful. Have a good day. Good night. Thank you. Bye-bye.